Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over market conditions and ratios for commodity bull market, see how they're looking, see if we can see if the bull market is still intact or if we've got something else coming on. Let's dive in. I'm going to start with the dollar and 10-year yield first. And looking at the dollar, I still think that we've had incredible strength in the dollar. I think at some point it will turn and head lower. That is what I'm looking for. That's what happened in the mid 2000s. So if we were to look kind of from a big picture view, this is the mid 2000s or early 2000s, I should say. It basically strengthened from 95 all the way into about 02. 02, it broke down and we had a weaker dollar after that all the way till 2008. This is where a lot of the commodities really took off, is when, and what I'm going to try to explain it, and hopefully this explanation is what happened. But a lot of people, I think, rotated money in the early 2000s, selling out of the stock market. We had a stock market that was peaking, the NASDAQ bubble, and it peaked in 2000, 2001. That was a big rotation of money. And then at 02, I think that money was being deployed into lots of commodity type investments. We had inflation. We had an increasing interest rate environment. This was the expansion phase of real estate and higher interest rates in this area or cycle. So this was our expansionary phase of real estate. This was also the bubble in 06 onward. We have a similar setup coming up just like that. We've rocketed on higher. We still could stay elevated for a little while if we have a recession and things are still selling off. But at some point after that, I do think that the dollar will get weaker against other currencies. We've hit the expansion phase of real estate. Last expansion phase, we hit it in about 98, 99. Then we had one last blast in the dollar, and we're doing that basically the same way today. The 10-year yield is remaining elevated compared to where we were in the 2020s. But we're at that resistance line, and we have not broken through that resistance line, that white line going across. I think that we have paused here for a little while. We've got a large wick at the top. We've got some wicks at the top of the other 2 months around it. So we could head lower here depending on what people are feeling about the market. If people are fearful of a recession, this could head lower. If this blows over and the recession is just, we'll call it fears of a recession, this will break through and go higher if we still have those inflationary pressures in the system. And this could do a little bit of both. We could pull back first and then break through it later as well, which is also another option. We have broken the long-term downtrend line of this long 40 plus, about 40-year decline in interest rates. So we have broken that. We could be going into a new shift of increasing in interest rate environment, but it doesn't mean it has to be immediate. This may take some time to play out. Looking at commodities themselves, we've got this pullback that is ensuing. What I think this is wave one. We're going to get a pullback and a consolidation period. The length of this consolidation period, sometimes they're long, sometimes they're short. We had a similar type move when the stock market rolled over. In 99, we pulled all the way up till 2000, and we rolled over. We went down 29%, and two, we rolled over from December 2000 all the way till January 2002. So this trap, we'll call it a bear trap, or this consolidation period or this pullback, lasted for a good amount of time. It was about a full year at least, a little over a year. That could happen with us here. With the sell-offs in the market, we could have a recession, we could pull back, and this could pull back a good amount. We could even pull back somewhere till 210 or even 190 if it gets far enough down here. if there's enough fear in the market and if there is a recession. And then we're going to make a big move after that. So it's basically a washout. Looking at gold, gold is heading lower. It is also showing us that there's fear in the market and that inflation could potentially be slowing down. So that aligns with the CRB index. Silver's pulled on back, but it's at a very strong support area. And then platinum, priced in dollars, is pulling on back as well, but we are slightly above its cost curve. Cost curves, I'd say $750 to $800 is the middle of the cost curves for platinum producers. That's a great area to be looking at it. The XAU to gold ratio, we're going to start looking at a lot of ratios. This still has not broken this big downtrend line. This is the happiness line, I call it. We need to break that for happiness to ensue for the gold and silver mining companies. We are making higher lows. That's a good thing, but we have not broken out yet. And it doesn't mean that we can't come back and pull a little bit further back, given the market conditions of the fear of a recession or an actual recession being documented or logged. I'm going to go into a lot of ratios. So looking at ratios, we can get down there. The CRB to S&P 500. This is a kind of a longer term view of the ratio. We're getting a little bit of a selling pressure. We have a little bit of wick at the top there. We could pull back in this ratio, but it looks to me that we've been chopping sideways here recently, but we could fall back some degree in a recession. Commodities will pull back, and with lower interest rates, that could potentially happen. Now, I don't think the bull market's over with, but we could have weakness in the short term. And it could last for some, 6 months to a year. That is a possibility. We may not get a pullback. It all depends on the recession or not. So this does look like to me that we could potentially, put in kind of like a head and shoulder type pattern and head back to the beginning there. But that's only a possibility. It doesn't mean it will happen. And we would still be making higher highs and higher lows if we get, if we only pull back to somewhere in here. Platinum to gold ratio. Platinum is outperforming gold in the very, very short term, the past 3 days. Overall, we've broken out of this declining wedge pattern. We've broken out, and we're still just moving sideways, almost doing this super long retest. Platinum to palladium ratio, it's been pulling back, but the recent 1, 2, 3, 4 days, it's been rocketing higher, meaning platinum's outperforming palladium. And platinum is ultra cheap in relationship to palladium. We also have platinum to silver. It looks like it's trying to break out. We've broken out of this downtrend line. We're heading higher. We got a little bloody nose going on right now. Big long-term picture, we're right at the trend line trying to break. We got to close up here and get some momentum going. It'll be clear at that point. But platinum's been the metal that's held up the best through this at this time, if I were to choose a metal. Palladium's also done an okay job as well. Looking at the gold to silver ratio, we're getting a little wick at the top here. We had a big wick up here. This was definitely a bottom for silver. We've pulled on back. We're doing kind of a retest move. Maybe we hit the top of this, go up to like 97, and then head lower. I keep looking for a head lower. Now, if this starts to head lower, I would say that the commodity bull market's game on, because silver outperforms in that type of market condition. In a fear market condition, gold starts to outperform silver. That's when people are fearful. They dump silver and they prefer gold. So this is moving on higher basically with the dollar, the DXY. We're getting a wick at the top just like the DXY, and I think this will eventually head lower. Is it at that point? We'll find out. Palladium silver ratio, this guy's been just chopping sideways in a violent up and down movement. There's your channel basically, and it's just been chopping back and forth. These metals have been dueling it out back and forth. No real value has been gained or lost in either of the metals really over this period. Dow Jones to gold ratio looks like we're breaking to the upside where we could get a run out of the Dow Jones. Here it is moving higher. So we could see some moves higher with Dow Jones Industrial Average outperforming gold. That is analogous to people thinking that inflation may not be as high. They may be thinking it's peaking. And with oil pulling on back, I do think that this ratio will move on up with Dow Jones Industrial Average outperforming gold in the short term. We've got gold to oil ratio. That's pulled on up here some. We're at 17.44. Average is about 15 over the long term. And with a recession and fears of demand destruction and fears of XYZ, this has been pulling on up. I still think that we have problems in oil and that this will compress to the downside over time. We're just in the middle of that. We're getting some softening in the middle of that compression. We've got copper to gold ratio. Usually in a strong economic environment, this ratio goes up. Fears of a recession or a recession, this copper to gold ratio goes down. The weird thing is we have this ratio going lower, signaling economic weakness, and we've got interest rates, which usually are very tied to this, basically holding its own at a very high level, the 10-year yield. So we do have a bit of divergence where we have an inflationary slowdown. That's basically what it's telling us, given the market conditions. Looking at uranium, uranium's looking actually quite good. Uranium's outperforming silver. It looks like it wants to go higher. We've got uranium to the S&P 500. That is moving sideways at this time, but I'd like to see some strength out of uranium. Looking at uranium to gold ratio, it's been just chopping sideways. Big long-term picture view. I do think that this will eventually work its way higher over time, where we have outperformance of uranium. Uranium to crude oil. I mean, this looks strong. The candlesticks for uranium outperformance. And if we can break this downtrend line here, we're going to see a big move to the upside. We're not there yet. Uranium to copper ratio. Uranium's been outperforming copper. Copper's been pretty weak. We need to break this resistance line, get above it, close above it, and start running. And then the Baltic Dry Index to gold ratio, it's still chopping sideways here. We're still waiting for a launch. I don't think we'll see that launch yet. We're waiting for commodities to firm up. We're waiting for those recessionary fears to kick the bucket. And then I think we'll see a big move. But it does look good here on a weekly candlestick basis. It does look like it wants to run higher. And I've seen strength in those companies as well. Lithium just moving sideways. Let's look at it from a weekly. It's just moving sideways. Coming on down. The S&P 500 has been strengthening. So I think that's going to probably head higher here in the short term. The S&P 500 still hasn't broken its downtrend, but we've got some strength the past trading session. And then the NASDAQ, or the US Composite Index, it's broken its downtrend. We're starting to get a little bit of buying pressure. It's not out of the woods yet, but if it clears, 11,700 or so and closes above it, that's a strong indication it could go higher. Lumber firming up a little bit last trading session. This could go higher. That's a good thing when looking at the housing market. Lumber usually kind of moves up. You get this little pullback and then it rockets higher. And we may see a lumber price up around 1170 or something like that if it were to rocket higher. Nickel's been just grinding sideways. Palladium in dollars has been pulling back quite hard. Some of the agricultural futures markets, looking at a big picture view, they're kind of riding this trend line. I can kind of grab this down here. Wheat has been pulling on back. It looks like the So we've had lots of very big wicks at the top here. So basically we came up, sold off, and then it's reversing. This does look like a top where we could pull back for a little while. Soybeans, it ran into some selling pressure up here, and it's pulling back quite dramatically. Strong selling pressure. Corn futures also pulling back. And I don't really play any of these soft commodities, but we're just taking a look at them. Copper's been pulling back. It's got a lot of momentum behind it. People are fearful of a recession. Copper usually gets taken out to the woodshed and sold. The PPI is continuing to rocket higher. This is June's. So that is continuing to go higher. The producer price index of all commodities, it's going to be lagged a little bit, but we are seeing a slowdown in commodity prices themselves, like copper and all those. And then looking at aluminum, aluminum's pulled on back and we're starting to contract and get some support right where it's at. And then the Baltic Dry Index priced in dollars was up quite a bit past trading session. It popped higher 7%. We're seeing a lot of the companies itself move higher, but we're still above the support line. Everything looks good for the Baltic Dry Index. So that's also looking a lot better. So overall, guys, we're seeing weakness in commodities. I think this is between wave 1 and wave 3 that will be coming in the future. How long this pulls back, that's anyone's guess, but I'd say from like 2 months ago, maybe 6 months to a year to 18 months, somewhere in that range, we could see a pullback. And if the recessionary fears blow over, it could be shorter. This is something that no one's going to know the exact duration, and we could already be done with it. It all depends on the economic numbers that come out and what people think. So that's where we're at right now, and I'm still long in commodities. I think that we still have an expansionary phase of real estate, and I know people think, oh, it's gone down. Guys, real estate is seasonal. This is the time of year where it actually starts to pull back some. It pulls back all the way till, I'd say, about the beginning of the year, beginning of next year. And then we start trucking higher again. So that seasonality has to be accounted for. And we've gotten weaker during this time frame almost every single year. So if we drop a few percent, that's normal. You're going to see softening in the markets. We have higher interest rates, and there could be softening. We could see price reduction in price reductions off of their original listing price. It doesn't mean the house went cheaper. It just means that they had to lower the price in order to sell the house. They guessed wrong, so to speak. They were too aggressive with their initial offer, or initial listing, I should say. But we'll go over that as data gets released. I'll share that, and that's where the current market is, in my opinion. If you guys like this analysis, give me a thumbs up. Subscribe to the channel. Subscribe to the website below, the Platinum membership of thefindingvalue.com. That is something you can sign up for. If you're interested in learn more, come to the question and answer sessions and ask a bunch of questions. I'll give you my opinions on it. And that's all I've got for today. So we'll catch you next time. This is Finding Value.